Hello everyone. I hope you have enjoyed the buying and selling strategies we have worked on together in previous videos. As I mentioned before, I run all of these strategies through long-term backtests and share the ones with a high win rate that I am confident will generate profits with you. In this video, I will share another strategy that I have tested for a long time and have seen surprising success with. We will use two indicators. One is the Bollinger Band, which is one of the fundamental indicators of technical analysis, and the other is the ribbon style of the popular Donchian channel indicator. Now let's learn briefly what these indicators do and then set their parameters. Bollinger Bands are a technical analysis tool that consists of a moving average and to standard deviation lines that are placed above and below the moving average. The moving average is typically a 20-period simple moving average. Although other periods can be used, the standard deviation lines are calculated using the same period as the moving average and are placed to standard deviations away from it. The purpose of Bollinger Bands is to provide traders with a visual representation of volatility and to help them identify potential buy and sell signals. When the price is trading near the upper Bollinger Band, it is considered to be overbought, and traders may look for selling opportunities. Conversely, when the price is trading near the lower Bollinger Band, it is considered to be oversold, and traders may look for buying opportunities. Donchian ribbon indicator is created based on the classic Donchian channels developed by Richard Donchian. This indicator is a technical analysis tool that helps determine the direction and trend of price movements. The Donchian ribbon indicator assists traders in making buy and sell decisions based on the trend direction. For instance, when the price is moving within green bars, traders can open long positions. Conversely, when the price is moving within red bars, traders can open short positions. Yes, my friends. We have also set the indicator parameters, and now we can move on to the strategy rules. The basic rule of our strategy is as follows. First, I am describing the long position. The price must close above the Bollinger upper line and then return within the Bollinger lines. If it again closes above the upper line and the Donchian ribbon indicator confirms with a green color, a long trade is opened. Of course, these conditions are only valid for short positions, and we will apply them in the opposite way. Now let's look at an example of a short position. As you can see, our first condition has been met. A red bearish candle closed below the Bollinger lower line. Additionally, the Donchian ribbon indicator turned red. Now we will wait for the price to return within the Bollinger channel and again cross below the lower line. This retracement is a confirmation move used by many professional traders. After 4 candles, all the conditions were met. We enter the trade with the closing of this candle. Ideally, the stop-loss level should be above the Bollinger upper line. If the trader prefers, they can also use the high of the last swing as the stop-loss level. This is a choice entirely related to the trader's risk management. We also take some profits. When the price reaches a 1-to-1 risk-reward ratio, which is equal to the stop-loss level, we then move the stop-loss level to the entry point, completely eliminating our risk. As you can see, we kept the profit we made, and the market reversed back to the point where we entered the trade. The trade is closed. Let's take a look at a new example. A red candle closed below the lower line, and Donchian ribbon turned red. We are waiting for a short position. And the price first entered the Bollinger Band and then closed below the lower line again. We are opening the trade. I'm putting this line to determine the 1:1 profit ratio. Let's take a look at a long position example now. I just noticed something new. The first green candle I marked should have been the next one. I apologize. Our first condition is the next green candle that fulfills it, because the Donchian ribbon indicator turned green below the candle. All conditions are met. I'm marking the 1:1 level when entering the trade. A red candle closed below the Bollinger lower band. Donchian ribbon indicator turned red. Price has returned inside the Bollinger Bands. We are waiting. And for the second time, a red candle closed below the Bollinger Band. We enter the trade. The first target is the 1:1 risk reward level.
Yes.
Certainly, I believe you have a clear understanding of the trading rules. If you have any questions, please write them in the comment section. By the way, if you are not subscribed yet, don't forget to subscribe and hit the like button. Now, let's take a look at a few more examples. If you noticed, in this example, our strategy hit the target in a sideways market and even in a very low volume environment. Through backtesting with this strategy, I have seen that it can achieve a winning rate of up to 87%. Let's now speed up our examples a bit and try to gain experience as much as possible. I don't think we need to extend the video any further. I'm sure if you apply this strategy patiently and with discipline, your capital will increase. Don't forget to turn on the notification bell to get instant updates on the next video. See you later. Goodbye.